All right. Well, good afternoon, everyone, and welcome to our US webinar on COVID-19, how to manage the financial impact on your business. My name is James Brooks. I'm the manager of our sales engineering department here at Lightspeed, and I'll be the moderator here today for this webinar. So we're all aware of the impact that this current global health crisis has had on our retailers and restaurants across the globe. We're also aware that the businesses are having a hard time managing the business while at the same time trying to keep track of the different measures and funding support that are available to you guys. So that's why together with some of our partners, KPMG, Homebase and Business Cents, we've compiled different types of federal and financial resources, as well as some HR best practices that we hope you guys will find useful. So throughout the webinar, we'll do our best to answer any questions that you submitted during the registration process, but also you should see a box on your screen in the GoToWebinar control panel for questions. So you can submit them live during the webinar, and we will try to incorporate them throughout the webinar wherever possible. But also, if there are any that we weren't able to get to, we will definitely reply to those after the webinar and get you the answers to those. All right, so without further ado, let's kick things off here, guys. And we'll start off just going over what we'll be covering today. So first of all, we'll be taking a look at essential businesses and how to apply for essential status if you haven't done so already. We'll be looking at tax credits and how to apply for them, how to deal with layoffs and approaching those within your organization. We'll also look at some of the government support for retailers and restaurateurs that is available to you in the US, tax extensions that are available, some non-governmental financial resources, and the eligibility for those programs, some HR best practices, and last but not least, some sick leave policies that you guys can take a look at here. All right, so without any more delay here, I'd like to introduce our awesome panel. As I said, we've got some of the best minds as it pertains to these topics today. We've got Russell Crawford from KPMG, we've got Rushi Patel from Homebase, as well as David Glantz from Business Cents. So I'll actually hand it over to the guys now and let them just give an introduction on themselves and what they do. So Russell, why don't we kick it off with you there?
Well, thank you, James. It's a pleasure to be with everybody today. Just a quick background. I am the U.S. partner in charge of our U.S. tax practice across Canada. Been in Canada for the last 9 years. Prior to that, spent 30 years as an international tax partner with the U.S. firm. And again, it's really a pleasure to be with everybody today.
Awesome. Thanks for being here, Russell. We appreciate it. Rushi, why don't we kick it over to you there?
Sure. My name is Rushi Patel. I'm the co-founder of Homebase, and Homebase helps over 100,000 businesses in the US and Canada manage all of their employee scheduling, time tracking, hiring, and team communication needs.
Awesome. And we love the Homebase colors as well, keeping it bright and cheery for us here today. And last but not least, David Glantz, one of our Lightspeed partners. David, why don't you tell the folks about yourself?
Thanks, James. So we are a San Francisco-based firm. There's 5 of us in the practice. We've been a Lightspeed partner for 5 or so, maybe more years. We're also a QuickBooks solution provider for the past, since the beginning of the program. And so our focus is on retail, inventory, and accounting.
Awesome. All of my favorite things, David. So before we actually do get into the actual content, everyone, just one thing to make mention of here. We've got tons of different information here to try and help advise you, but any legal, financial, or tax content that's provided is simply for informational purposes. We always recommend, no matter what you're doing, that you reference your own, legal or accounting expert locally that you work with, just to confirm that what you are doing is correct. So, with that, let's get into the actual content here of this webinar. We've got lots to cover. So to kick it off here, David, I'd like to start off with you and this question. So what exactly is an essential business, and how can businesses apply for that essential status?
Well, there's a general consensus on what is considered an essential business, and it's all that what we know of: groceries, restaurant takeouts, hospitals, banks, gas stations, etc. Those are the typical, but each state provides guidelines on what it considers an essential business. So it's important to check with your state to determine what is essential. But there's always exceptions. Some businesses took it upon themselves to self-proclaim that they are essential. Some of those changed the tune, like Tesla and WeWork and Michaels, et cetera. And you probably heard recently about some states that have started to or will start to ease up on what is considered an essential business. For example, Georgia's been the one that's been in the news mostly of late. But bottom line is that each local municipality can further restrict an essential business. So for example, San Francisco has further restrictions beyond what California has determined as essential. Los Angeles has different essential business definition. And so it's important to check with your local municipality. And as far as how to apply for that status, some of the local municipalities do have an online form to request this. Most of the states have an online form where you'll fill in your business information, your NAICS code, your justification for why you want to be considered an essential business, and then it goes into the bureaucracy from there. But bottom line is check with your local municipalities first, and then as a fallback, if that isn't defined locally, then check with your state.
Okay, great. Thanks so much, David. All right, so Russell, I'm gonna pose this one to you here. What types of tax credits can retailers and restaurants benefit from? And again, what is kind of the process to go through and apply for these tax credits that are available to them?
Yeah, there are definitely a number of credits, and I'll actually comment on a couple of other things from the pure tax perspective for everybody to take into account. So on the credit side of things, one we're seeing a lot of focus on right now is what's referred to as the employee retention credit. And this is a credit that is available for wages apply up to $10,000 of what I'll call qualified wages, get a credit for 50%, so up to $5,000 per employee. Two ways to qualify for the credit is if you've had a quarter-over-quarter reduction in your gross revenue, which in some cases we're seeing happening, obviously, but it's a very objective test. But there's also a subjective test. And the subjective one is whether you've had a full or partial shutdown due to a governmental order. And what we're finding on that one is a number of clients we're talking to, they're not closed maybe because they're an essential business. And they're questioning, well, what is a partial shutdown? I'm still not shut down because I'm an essential business. We are finding it's being interpreted very broadly by Treasury and the conversations we've had with Treasury. And so I would definitely suggest you talk to your tax advisor, take a look at it. Very well could apply on a partial basis for qualified wages. There's also a credit for certain sick leave payments that are now mandated in the second act that came out by Congress that was really focused on employers with less than 500 employees. And in that case, providing for mandatory sick leave and such, there's a credit to help offset and apply for that. So that is something you definitely want to take a look at. Then the other item out there is the ability to actually defer your Social Security payments. And this is the employer portion of Social Security payments. An ability to now defer those payments that would otherwise be due during the year 2020 and actually defer them 50% to December 31st of 2021 and December 31st of 2022. Everything, of course, is being focused on the ability to get cash flow out there, keep people employed. On certain programs, you do have to be careful as to whether they apply. If you do, however, take advantage of the payroll protection program. So there are some restrictions of what you can and cannot do. So it's really important to work through which one is most applicable. So example, on the employer retention credit, it does not apply if you are successful in getting a protection or payroll protection plan payment. Now, on some of that, we know that program we're going to talk about a little bit got closed out in terms of being funded, but we're expecting to see that come back with what's just happened in the Senate. And so in some cases, what you may be able to do is go ahead and focus on claiming the employment tax credit. But then if you do get a loan under the PPP program, then you would just repay that back. There are different ways to deal with it. So again, really working through all your options are quite important. A couple other things, actually from a pure tax perspective, to also comment on is the ability to carry losses back. So for anybody that happens to have a loss in 2019, or if you're going to have a loss in 2020 with what's happened in terms of today's environment, under tax reform back in 2017, you were no longer able to carry losses back. That was changed under the CARES Act. So now you may have an ability to take a loss you otherwise thought you could not carry back and get immediate cash associated with that. Processes you need to go through. Another thing for the retailers is really important in terms of a benefit that just came through in the CARES Act is now the ability to take bonus depreciation in your qualified investment property. There was a glitch under tax reform that put certain leasehold improvements, and especially applicable in the retail industry, certain leasehold improvements in a 39-year property category that could not be subjected to bonus depreciation. That was corrected as part of the CARES Act. You may be able to go back and amend even your 2018, 2019 return, get some immediate cash back. So those are a combination of things in the tax world, both tax credits, but also some specific income tax items that you want to be taking a look at.
Thanks so much, Russell. So I'm going to switch over to kind of the more of the HR side of things, and Rushi, I'll hand this one over to you. How should retailers and restaurants approach layoffs during these times?
Yeah, I suspect many of you may be approaching this with the dollars and cents in mind as you're looking at what's happening on your P&L. But we also recognize, as we've talked to a number of business owners here, that this is a highly emotional decision as well, as you're dealing with members of your extended employment family and sort of the humanity and the piece that goes into that. What we're hearing from how different approaches you can take here, some people like to use the term furlough, a temporary layoff, a permanent layoff. I mean, ultimately what it means is that person isn't going to be working at your place of employment for a certain period of time, and whether that's temporary in nature with respect to a furlough. And what that typically entails are things like a reduction in the number of hours you expect them to work. So whereas you hired them before to work for you for 40 hours a week, you may say during this furlough period, we're going to reduce the hours down to 10 hours per week for you. Or that maybe you're going to close your doors for the next 2 weeks and that it's going to come back right in 2 weeks. So it's just a 2-week furlough. Typically, it involves some sort of estimated date of reopening. So you want to be able to communicate that to your employees. A temporary layoff is a layoff with the intention to rehire the employee, again, generally within 6 months. And then a permanent layoff is a layoff where you cannot anticipate when you're going to rehire that employee. But ultimately, what matters to the employee is that there's a communication and clarity around, well, what does it mean for me and what does it mean for my employment with you? And then what does that mean for state unemployment claims? And whether it's a furlough or a layoff, they're going to qualify for the state unemployment claims. And so that's important to keep in mind. One other aspect of an approach that some businesses are doing as well is with respect to furloughs is addressing specific benefits, particularly health insurance benefits. And so if your company offers health insurance benefits, and given it is a health crisis that's occurring right now, there are many employers that are finding a way to extend the health insurance benefits during the time of the furlough. So even though they may be doing 0 hours a week with you, you're able to extend your benefits. We would encourage you to just consult your health insurance broker or the insurance agent that you use to get your company's health insurance set up. Most have policies in place that enable you to provide this benefit, continued medical care coverage to furloughed employees, but your particular broker or insurance policy might have some exceptions. So it's just important for you to confirm that you'll be able to continue to provide employer-provided medical care insurance to your employees even while they are on a furloughed status. The last thing I do want to comment on here, because it just depends on what state you're in, where you're located, and how long your local authorities have sort of previewed to you that your stay in place, your shelter in place order, or the limited business transaction orders are going to stay in place is how you time your decision to make a layoff or a furlough. And two components here, with PPP round 2 potentially coming into play as soon as later this week. You may want to keep that in mind in terms of if you lay off employees, in order to get the forgiveness component back, you'd have to have them back on your payroll fairly soon. And then the other piece to keep in mind is that as part of the CARES Act, there's additional money available for state unemployment. It adds $600 a week to the unemployment dollar amounts that the employee would otherwise get the normal state formula. And so there is some risk here that your employee may actually get more money collecting unemployment for a brief period of time than they would being employed by you. And so that's just something to keep in mind in the consideration set of what you go through. In fact, CNBC today just profiled a small business owner story where she's facing this exact situation.
Great. Yeah, it seems definitely a recurring theme throughout that, it really is jurisdiction dependent with the different policies, whether it's, employment benefits, taxes. So definitely always approach those local resources. Thanks, Rushi. All right, so David, I'm going to bounce this one back over to you here as well. What types of government credit support programs are available for retailers and restaurants, and how can they be accessed?
Thanks, James. So the two primary ones are both through the Small Business Administration, the SBA. There's the one you've heard about probably most often, which is the PPP, the Paycheck Protection Program. Then there's also the EIDL, which is the Emergency Injury Disaster Loan Program. And first, I'll talk a little bit about what the programs are. You might have heard of this over and over again. You might even already be in the process. But just to set some framework, we'll talk a little bit about what these programs are and then go into an update on current events. So the PPP. So the intention here is to retain employees. So not to lay them off necessarily, if at all possible, but keep people employed. Now, on April 3rd, the applications opened up with the SBA or through the SBA. This is actually a loan through a bank or really an SBA approved lender. So you don't apply directly to the SBA for this loan, you apply through a financial institution. And so on April 3rd, it opened up to the small businesses that have less than 500 employees, at least those that had on February 15th, that had less than 500. And then on April 10th, it opened it up to sole proprietors and independent contractors, those who have no employees but are still a small business. And the loan amount that it uses to calculate is basically your average payroll for those that have employees times 2.5. And we'll get into what that means in a sec. For the sole prop or independents, it's basically a good old line 31 of Schedule C divided by 12. And that basically would be average net income multiplied by 2.5. And though this is a loan, there is a forgiveness on this loan for the 8 weeks following the approval. And so the reason why it is 2.5 is because it'll include not just payroll, but also rent and utilities and insurance premiums. Rent could also be maybe if it's a mortgage, if you have a mortgage. The idea, though, is that at least 75% goes towards payroll. Remaining amounts, can be retained as a loan. It's a low interest loan, so it's 1% over a 2-year period with no payment for 6 months. So it's a very enticing program for those that have employees and for small business with employees or without employees. So let's talk about the EIDL for a sec. So the EIDL is not new. This is something that's been around for quite a while through the SBA. And you apply for this through the SBA, not through your bank. It is a government loan. It's 3.75% loan or 2.75% for nonprofits. The intention here is for it to cover 2 to 6 months of operating expenses. It's a much more arduous process to get this loan. It requires a lot of financial information that you need to report because it is a loan. With the CARES Act, the requirements were lessened a bit to make it easier to apply for the loan. There's also an EIDL grant, which is a $10,000 grant, which you can apply for in addition to the loan or even separately from the loan, and it is not asked to be repaid. So this is a $10,000 grant for the small business through the SBA. If you apply for the PPP as well as this grant or advance, then that 10K will be deducted from your PPP. And again, you apply for the EIDL through the SBA site. The PPP, you apply via financial institution. Now let's talk about what's happened recently, because it's been a lot in the news of late. Yesterday, the Senate passed a supplemental funding bill for these programs. It's now in the House. I'm not sure if it'll get approved today or tomorrow, but the idea is that hopefully by tomorrow, or at least by the end of the week, that it'll get passed by the House. It'll also be signed by the President. Now, the first round, just for background, the first round was about $350 billion in this program. And the SBA says that there was 1.66 million loans funded, which is a bit more than 342 billion. Now, there's been talk about, well, it's supposed to be first come, first serve, but people didn't feel like it was first come, first serve, and I don't know what the facts are. And there's lots of rumor mill going around about what that means. So we won't talk about that here, but this extra funding should hopefully cover those that who are still waiting. Now, this new funding bill is $310 billion for the PPP. 60 billion of that is for smaller lending facilities. So not just banks and financial institutions, but for smaller lenders. There's 50 billion that's been added to the EIDL, 10 billion added for the EIDL advance. This bill also includes other things like that are not necessarily related to these programs. 75 billion for hospitals and healthcare providers. There's 25 billion for expanding testing, and there's 11 billion to help states and local governments with testing. So if you've applied for the PP and you've received your funding, congratulations. If you're waiting for your lender to get back to you, hang in there, because the institutions will be processing these loans once the funds are made available. If you have not applied for the PPP, then and this fits you, because it is average monthly payroll, doesn't necessarily mean that it's all 2019. It's really covering the period of February 15th. So if you have payroll during that period, you can apply using your average monthly payroll. It's going to require you to submit a whole bunch of financial documents, not like the SBA loan, but it will require, for those who are employees, it will, or have employees, it will require you to submit your payroll reports. Some of the payroll companies have special PPP reports that are available that you can run just with a push of a couple buttons. It will require they want you to send your 941s and your 940 from 2019, so they have a sense for what your payroll is. And if you're independent or a sole prop with no employees, they'll want you to send in your Schedule C from your 2019 taxes. Even if you haven't done, and Russ, you can correct me on this, even if you haven't done your taxes, if you are able to fill out at least the Schedule C, then my understanding is they will take that schedule. So The PPP is a fairly straightforward process. It's just for most of us, it's a waiting game. I can tell you for our clients, there is a minority of our clients have received funding. In talking with a number of colleagues, some of their clients have received funding, some have not. So it's kind of hit or miss. I don't know the pattern. My feeling is the larger banks are a little more inundated. The smaller, my colleagues who I've talked to, the smaller banks have been able to process quicker. That's my experience. That's not anything that is factual, but just my experience. But with the EIDL, that's through the SBA, and you can get that $10,000 advance. There are other programs outside of the PPP and the EIDL, which are at the state basis and the local basis. I highly recommend you checking out the U.S. Chamber of Commerce site. They have a section in there that is state by state funding programs. Some of those are loans, some of those are financial assistance. And there's a number of them out there. A lot of cities have programs as well. I can tell you San Francisco has 2 different funding programs. There are ones in Arkansas and Colorado. I mean, every state, no, I shouldn't say every, many states have a program that's either a loan or one that is funding. So I highly suggest you take advantage of the resource of it. U.S. Chamber of Commerce has a pretty good website with a lot of information. Sorry, that was a little long.
No, I mean, it was all useful information. And actually, I've got a couple of questions here that popped up during that, David. The first is a newer business. They've only been open for 5 months prior to the pandemic hitting, and are just kind of barely breaking even at the moment. They did apply for an SBA loan, but it was only $3,000, which will only cover basically 1 month's rent and the power bill. So they're, asking how will they ever kind of catch up here? I mean, what would you maybe suggest, David? I know you just listed a bunch of, additional resources for funding outside of the SBA loan. Would you recommend they try and investigate that first, potentially?
Well, if they have an SBA loan, I'm not sure if that's the EIDL. If that's what it is, I would highly suggest filing for the PPP because it is based on for payroll as of February 15th. And they can provide the 940 one for Q1 as well as whatever they have in Q4 of 2019 and payroll reports, and that will be considered during the loan process.
Okay, great. Actually, a follow-up question on that. Sorry, an attendee here had applied for both EIDL and PPE and received $300 deposited into their bank account. But they don't know which money they've received. So are they supposed to receive some form of documentation so they know what they've received? Is there any way to track that?
Yeah, for the PPP, it should be the deposit, the money that actually goes into the bank. One, your financial institution should be communicating with you that the loan has been approved. But also that on the actual deposit, it will explicitly say that it's the PPP. If it's the PPP.
Great.
Yeah, and I'll just add to that, it was because it was a very round number, the $3,000 that was received. It's very likely that's the EIDL disaster because that was capped at $10,000 and the formula was $1,000 per employee. So if you likely had 3 employees, maybe when you fill out that form, that's probably what it is. And to David's point, you'll see it on the ACH details. When the money comes into your account, it'll say PPP, and that dollar amount from the PPP, if you get approved and if that's what it was, should match the dollar amount that was done in the application.
Right, the 2.5 times payroll, right?
Awesome, thanks, guys. So speaking of questions, I do have one here, and just for anyone who's tuned in here, anytime you see one of these kind of black slides here, this is actually a question that was submitted during registration for the webinar. So David, I'm gonna, I guess, bounce this back over to you here. We've got a small independent retailer. The government programs that can be forgiven are tied to the number of employees. Are there any other funds available that will be forgiven or loans that are available. I guess you kind of touched on that in what you were discussing there, but is there anything else you'd like to add on top of that?
Well, the only thing I would add is that can you go back to the previous slide if that's possible?
Yeah, absolutely.
Okay. So, I mean, the PPP does cover the employees. So it does cover the payroll portion of it. And so I would recommend applying for the PPP if that's not the case. Then these other things, I would definitely check locally. I go to the U.S. Chamber of Commerce site, check out what they have state by state, which includes not just not state programs, but also local municipal programs that might have other forgiven sort of arrangements as compared to loans. There's lots of loans out there. You know, loans are loans. You have to pay them back. But there are programs that will provide funds that will be forgiven.
Okay,
so
great.
Check your local resources.
Thanks, David. Russell, I haven't forgotten about you there. You've been sitting there patiently. This next one is actually for you. What type of tax extensions are actually available to people during this pandemic?
Yeah, no, absolutely. So we have both tax extensions for payment purposes as well as for filing purposes, and I suspect most people have heard of these. So for income tax purposes on the federal side, generally now we have an extension until July 15th for any return that was due from April 15th through that period of time, and also a deferral of any payments that are due for federal purposes. What you do need to do is for state purposes, you're going to find most states are following along. But as you can imagine, every state will vary. Local jurisdiction will vary in terms of what they may have for extension purposes, for both filing purposes and as well as for payment purposes. In some cases, you may still be subject to interest, even if you do have a deferral, but no penalties. And so sometimes you got to think through, do I really want to defer it or not, from an administrative perspective? But it is definitely helpful from a cash flow perspective. And so those are the key things that we're seeing at this point in time.
Great. Thank you, Russell. All right, so again, we've got another registrant submitted question here. Russell, I'm going to throw this one back to you again. So the person applied for a PPP loan a week ago, but the timeline is unclear on when they'll find out if their nonprofit is approved. In the meantime, are they able to defer their payroll taxes, or will that make me ineligible to receive a PPP loan?
Yeah, so in regard to that one, I may have already referred to that. It's okay to go ahead and focus on deferral. What will happen though is if you do get a PPP loan, then you'll need to pay that back. But again, no downside, I would say at this point in time. Proceed, since you don't know for sure if you're going to get to PPP.
Great, thanks, Russ. And then just again for you here, I told you I hadn't forgotten about you. What non-governmental financial resources are available for retailers and restaurants, and how are they accessible?
Yeah, I'll comment on that, and then David and Josh, Rushi may also have some thoughts in that regard. Again, I think you got to kind of look by jurisdiction in terms of what's available. It's really going to vary by locality at this point in time. So how's that for a vague answer?
Awesome.
I'll also
Rushi,
add that.
Did you want to add? Oh, sorry. Go ahead, Russ.
Yeah, so there's some organizations, like there's a Restaurant Workers Community Foundation that has been soliciting funds and is also providing those funds to those in the industry. Some of the bars have supports and foundations that are supporting them. I wish it could be a definitive list. The RSPA has some of that on their website, but I would check with others in your sector, your industry, and to see if they've had any luck with finding foundations or organizations that provide revenues or provide funding for you. There's a lot out there. There's a lot of support out in the world for the restaurants and for really retail in general. It's just, unfortunately, it's a matter of finding mostly the local ones.
Yeah, to David's point, even on our site on joinhomebase.com, we've got a section where we've got employer and employee resources, but it's not a definitive list because there are a lot of local things. I will tell you, the one place that I found and hearing from our customers they're having a lot of success is just by talking to their vendors. And what they're doing is they're discovering some of their vendors are actually business partners they didn't think about that they had. Like the relationship is shifting in a way that the vendor is responding in a way that's quite helpful to the customer, changing payment terms to allow an extension of time, providing credits for future purchases. So it certainly does not hurt to ask, and you may actually find yourself changing the relationship type you have, because you may actually start to see them as more of a partner in helping you maintain and build your business than just a service provider or a vendor you were using before. So I would highly encourage, if you haven't done so already, go through your accounting books, look at where you're spending money, and just ring them up and see what they have available. Many of your suppliers and vendors now actually have programs specifically designed to help alleviate some of the financial strain during this time.
Right. Yeah, that's a really interesting point, Rushi. I think there's so much changing and adapting just in the way we do business all across the board through this crisis. And I think sometimes it's actually one of the positive things coming out of it. So really great point there.
If I can add one more thing on there. I think that's to Rushi's point of, so there are a number of the banks, a number of the financial institutions, credit card companies will defer payments. It won't be forgiven, but they'll defer. Some of the mortgage companies will defer the interest portion of your payments. Credit card companies will push out payments for, depending on the company, 30 to 60 to 90 days. Doesn't mean that you're not going to still incur some sort of interest or finance charge, but a lot will work with you to defer those payments. The property taxes, your insurance, there's a number of, check with all your vendors. Anything that's on your vendor list, check with them to see if that's something that they will work with you on.
Great. Yeah, absolutely. So I'm going to actually stay with you here, David, for this one. And we just actually got a question, I think that's tying into this as well as the next question. But it's really, I guess, about kind of one-man show sole proprietors here. So we'll start off with this one. What's the grant that kind of one-man show would benefit from the most currently?
Well, there's two. I mean, there's the PPP, which you can apply if you are a one-person show, and then there, for those that are independents that are impacted, there is unemployment. But as far as those that are still making money, or maybe their money has been reduced, their income has been reduced, the PPP is a good program for the independents and the sole proprietors.
Okay, great. And that's kind of a second follow-up here, and this is I think what the person was asking online is if they're not taking a paycheck from the business, and most of their profits are going back into inventory. But it's even a bit more specific on this question that I just received online. So I'll actually read it out to you here, David. So this attendee has applied for PPP and EIDL, but in the meantime have had to save cash for rent and can't afford to run payroll for the past few cycles for themselves and their partner. Will that create any negative impact with the PPP application? Or is there anything that they should do with payroll with a payroll company rather than just skipping to run it?
Yeah, it's not based on current payroll. It's based on payroll really as of February 15th, even though they're going to look at your history to get an average. So even though they've had to adjust in their current cycles, it's really for the past. So definitely apply with the PPP, provide your 941s and all your payroll history, and it should cover it as of the February 15th payroll.
Yeah, just to add there, and understood you're having to skip for yourself and your partner your specific payrolls. For the forgiveness component, there's a formula that will come into play, but so long as you get yourself back up to where that number is, it's okay that you had made some skips of your own payrolls, so long as you get yourself back up by the date that's required. And And even that piece, I can't be much more specific than that. I don't know, Russ or David, if you can, and partially it's because they've given some bullet points around how the forgiveness formula will work, but they haven't actually given the banks the form to say, use this form as part of the forgiveness calculation. But the bullet points suggest that so long as you get yourself back up, so you've implicitly given yourself 100% pay cut for the time being, but so long as you get yourself back up to where you were pre-Feb 15th, you should be eligible for that forgiveness formula. And I'm seeing nods, so I'm same interpretation.
Okay, great. And I do have one more follow-up here with regards to the PPP and grants. The attendee said they understand this is only applicable to full-time employees. What about part-time employees such as themselves, who is an executive director for a nonprofit?
My understanding is it's employees, so it's about payroll as compared to FTEs. Is that right, you guys?
Yes, I have the same understanding. There's a calculus you can do to then convert. It's the equivalent of a PTE turning into an FTE. Then there's ratios, but it is what David pointed out, which is it's largely your $941 amount. And then even though it says, well, how many employees did you have for this? You might have had 100 part-time employees. Well, there's a conversion formula you use to say, here's what that equals in full-time employees. And that's the number they'll look to as the full-time employee equivalent.
Right.
Got it. Yeah. Okay, great. Rushi, I'm going to stay with you here. We'll jump back over into the slides. What are some of the HR best practices and resources that these independent businesses should be trying to use during COVID-19?
Yeah, I think the best practice at this point is to over communicate. It's not even communicate with your team anymore. It's to over communicate with your team. Uncertainty leads to a lot of a doubt and lack of clarity around what it means, like what's going on in your business, what it means for them from a point of employment perspective. So I think just being as open as you can be around what you know, and quite frankly, what you don't know, because there's still a lot that you may not know just yet. And I think it's okay to be a little bit transparent there, because it builds that trust level that you're asking your employees to give you. So that's step number one, is over communicate. After you've done that, now you're thinking about your business, getting back into business if you've been impacted so far, or how you're going to sustain and grow your business coming out of COVID. And so to that end, there's two things that we tell our customers to think through. And one is creating a safer workplace. Like, I recognize your workplace might have already been safe because that's something you want to have at your restaurant or at your store. But now you've got to think about, how do I create a safer workplace and create policies and enforce those policies that allow for that? So if you Google things like interim guidance for businesses and employers, that's the CDC has that available. It will give you kind of specific best practice steps to follow when it comes to creating a safer workplace. Create policies around employees washing your hands as soon as you enter the door. Schedule regular hand washings. Schedule disinfecting of frequently touched areas. So this is your responsibility to ensure that both your employees and your customers have a safer experience at your place of business. One of the concerns we've been hearing about is the lack of supplies on disinfectants and things like that. But if you just Google search COVID list N, that's the letter N, the government's put out an entire detailed list of different disinfectants that you can use that will be able to combat the coronavirus. And then the other thing that's happening from creating a safer workplace is figuring out who's really required to be at your physical place of business. It might have been pretty traditional for you to have your bookkeeper or someone from the back office at your place of business because you had office space for them. But if they're not required or essential to the operations, you may consider kind of staggering when they come in, how frequently they come in. That's part of creating the safer workplace. You can't do that necessarily with a cook or a dishwasher, or you can't do that necessarily with someone who's managing your inventory in the warehouse. But there may be roles you have at your company that you can start to think about a more creative schedule around. And then, of course, there's the other standard practices you're probably thinking through yourself right now. If you're a restaurant, what's the spacing between the tables? If you're a retail establishment, what's the spacing in the aisles? Are you going to change the aisle flow in any way? Now that you've created the safer workspace, the other best practice is now maintaining that safe workplace. And so questions that our HR professionals are getting right now are things like, hey, can we take their temperature when they come in, or ask about symptoms? Pre-COVID, the answer would definitely have been no, like you should be really careful, and the guidance was no, that will get you in trouble. In this COVID and post-COVID world, the CDC has said it is acceptable, and the Department of Labor is allowing that to happen. It's just when you do these things, there are policies. So there's you can search for these things, but it's pretty straightforward. If you have to ask questions about symptoms, keep it COVID specific. If you're going to take temperatures, do not log temperatures on a public wall chart for everyone to see. So those are the important pieces. That's still private health information, but you are permitted to take it. You're permitted to send your employees home. Unless there's a labor union or other set of rules that apply to your particular industry type, you're in generally safe. You're in a generally safe place by taking those actions.
Great, that's super useful. I actually had a really interesting experience. I went to the pharmacy yesterday, and they were asking me those types of questions going in. One thing they asked me as well, Rushi, which I didn't know if this would fall into it, but about my travel history. Is that something that an employer could ask their employee as well?
Yes, absolutely. And based off of the response to the travel history, the employer, so long as the employer sets a consistent policy and approach. And so for anyone that might have traveled to a high-risk area and the employer has created a list of these are high-risk areas, let's suppose New York is a high-risk area for that employer. If they travel there, so long as they apply that policy consistently, they should be safe, such that if there's 2 employees that went there, they both should get the same treatment in terms of a requirement that they stay off premise for X number of days or whatever that employer has decided to set as their policy.
Okay, great. Thanks so much, Rushi. All right, and I think this one is for you here as well. So what is FFCRA, and does it apply to most retailers and restaurants?
Yeah, so the FFCRA is one of the pieces of legislation that was passed. I guess everything is so long now from a time perspective, but just recently, it was just weeks ago that it was passed, but it feels like months ago now. It stands for the Families First Coronavirus Response Act. It's actually the first piece of legislation that came out, and it's different than CARES. And CARES had the funding components associated with how you can get access to funds. But this one dealt more with FMLA, a term that I know many of you may actually not be that familiar with, because typically FMLA did not apply unless you had 50 or more employees. But now this is a component of FMLA that actually applies to all employers, even those with less than 50 employees. And there's 2 big components to it. There's the emergency paid sick leave, and then there's the emergency FMLA childcare expansion. So typically FMLA tended to be around medical leave or having to care for someone in a medical distress situation. They've added a childcare inclusion to that because schools have been closed. And so the reason why this question kind of matters a lot is many of you may not have 50 employees. So you may think, hey, look, FMLA doesn't apply to me. But it's actually something that does apply, and you've got to check into the rules here specifically, because employers with fewer than 50 employees may be eligible for an exemption from the child care leave provisions, but not the sick leave provision. So there's a split that they made there, which is you may be eligible to not have to follow the child care leave rules if you have fewer than 50 employees, if at least one of these 3 statements that I make here are true for your business. If that by providing that leave would result in the small business's expenses and financial obligations exceeding available business revenues and cause it to cease operating at a minimal capacity. So if you only have 2 employees and they both claim the child leave, that would trigger the cease operating at a minimum capacity, and therefore you're not obligated to provide it. If the absence of that employee or employees requesting leave would entail a substantial risk to the financial health or operational capabilities of the small business because of their specialized skills, knowledge of the business, or responsibilities. So this is different than they're critical because if I lose these 2 employees and I have no employees. This is saying there's one person who is so critical to the operation of the business. Maybe it's the general manager, maybe it's the chef, that if this person is not here, the business itself cannot be sustained and it creates operational risk. Then you can claim that's the exemption that as to why it doesn't apply to you. And then finally, if there are not sufficient numbers of workers that are available or able or qualified and who will be available at the time and place needed, and that these labor or services are needed for the small business to operate at a minimal capacity. And so one example here may be that you've got a set of safety rules in place that says, under no circumstances the business to operate with fewer than 2 employees or 3 employees on premise. And if by allowing your employees to take this leave as part of the FFCRA, it creates a situation where you're not able to meet that safety rule you have in place, and it's not at the minimal capacity that you need, that would be another way that you can claim the exemption from this rule. But the guidance here shouldn't be around how do you skirt this rule. If you're capable and able to allow for the leave, we'd encourage you to find a way to offer it, largely because it is a paid for benefit, in that any expenses you incur as part of the Extended Child Care Leave Act, and it's got a capped expense pool of $200 a day. That's the maximum expense you'll have to provide that employee. Those are all rebated back to you in your Q2 941 that you'll file. And if you don't actually have that many dollars in credits available, or in payroll dollars available to get a credit against, you can actually get a advance refund for those components. Russ, am I stating those pieces right?
Yeah, I think that's correct. Yeah. You know, the one other thing I was going to comment on where you may need some legal advice is also depending on what your structure is. If you have more than one corporate entity that you have control of, the rules in terms of determining the number of employees is quite complex. I'd say it's even worse than the Internal Revenue Code and in the tax arena. It can be very broad at how that's interpreted. And I know we've been getting some questions about that I've basically said you need to go get legal advice because it's really under the Family Leave Act. So depending on what your circumstance is, make sure you look into that.
Great, thanks guys. So we've got about 5 minutes left on the webinar. I did want to open it up to some questions. I've got a couple more slides here with some questions, and also if there's any online that people want to submit, we can get into those. But before doing so, the first thing I just wanted to say is thank you guys so much for being a part of this. You know, I know you're all busy and are trying to manage this with your day-to-day as well. So the information that you have been sharing today is just super valuable to everyone that's been on this webinar. So I really wanted to thank you guys personally from myself and from Lightspeed as well for being a part of this today.
Very much our pleasure.
So a couple of things, guys. We do have some resources here, and I believe we'll be sending the recording of this as well as the slides out to you post webinar. So anyone that registered will be sending out that recorded webinar soon. So, and I think we'll have it on YouTube as well. So stay tuned for that side of things. But as you can see here, we've got a bunch of useful links to various associations, a lot of which you guys mentioned here today that you can access here. All right. So Rushi, I'm going to throw it back to you. I think this one's super important. You were talking about the workplace and actually being there, but how can businesses shift into more of a remote working model and managing employees remotely?
Yeah, I mean, for your business, you probably have a decent idea whether or not that's possible or not. But if it is something that's possible and you've got to find yourself managing your team remotely, just a couple things that we'd say are good practices to keep in mind. sort of, well, what are the hours of work? It's very hard for people now to separate between their home life and their work life when it's all occurring in the same place. And so how do you set and establish, well, these are the hours of work for the business? What are the expectations that you want to have with the employees and the managers around accessibility? Like, are they reachable at what periods of time? And then we'd also encourage just the concept of check-ins, because if you're isolated when you're working, it's sometimes hard to either be as productive, maybe challenging personally, just to deal with the isolation as opposed to the team orientation you're used to at work. And so we just encourage you to figure out what's the right check-in cadence you want to go with. And then lastly, if you shift to a longer term remote working model, work from home model, office expenses. It's something you want to keep in mind. Your state may actually have specific rules around what is required for you to provide as an employer from an office expensable perspective. It doesn't necessarily mean $500 ergonomic chairs or those standing desks or anything like that, but there may be specific rules, specifically like Illinois and California have some pretty strong guidelines there. Unclear what they'll relax or not relax during this COVID period, but that's something just to keep in mind is if you make this longer term shift, are you going to cover expenses like internet? Are you going to cover certain office expenses, a keyboard, a mouse, things like that, that they might have had if they were coming and working at a desk in your location?
Great. Yeah, I think the check-ins for me as a manager personally, I know that's been super important. But also just getting creative, I think, with people as well to help with that isolation. We've seen all different kinds of initiatives throughout the organization. I know one team, they do like a cribs tour as part of their meeting. So they walk around with their laptop and show their house. With my team, we've done TED Talks. So everyone just would pick a random presentation, and at the end of the day, someone would give a TED Talk. We've even done, we're doing life skills now, because I've definitely got some younger members on the team as well. And it was apparent once they were at home full time that there was some need for some life skills. So we've made that the new presentations. But it's tough for all of us, right? No matter if you're used to working remotely or not, life has changed. So I think it's important to be creative and understanding as we all try and battle this together. Guys, again, thank you.
I was just going to say, I invited 23 of my partners across Canada and their spouses over for dinner last week. I did ask them to take their shoes off, however.
Amazing. Yeah, I keep trying to do that with my parents, but they haven't quite figured out Zoom yet. But yeah, guys, I think we're up for time here. But again, thank you so much for being a part of this. And thank you to everyone online. We really hope that you found this webinar useful. But if you have any questions or want to give us some feedback, feel free to reach out to marketing.events@lightspeedhq.com. But also check out our events page. We will be doing more webinars with different content that you may find useful. So if you go to lightspeedhq.com/events, you can access those there. So thanks again, guys, and I hope you all stay safe out there.
Great. Take care.
Take care.